So the guest before Chinese New Year talked about individual taxation. Was that right? And it was, what was the name of this FATCA type arrangement that is now sweeping the OECD world? Common Reporting Standard. So it was to replace, it is basically FATCA for all non-US countries. If you're a US citizen, then FATCA is your jail, okay? All right, FATCA is your handcuffs if you're a US citizen. But if you're a non-US citizen, then you've got this Common Reporting Standard that all of the other countries in the OECD that are implementing, including China. But what is the big difference between this new standard and FATCA? This is a reporting standard for individuals. This is individuals, not corporations, individuals. So what is it? What is the basis? What is the big difference between this new standard compared to FATCA? Remember FATCA? FATCA was Foreign Accounts Tax Corporation Act, right? Or Foreign Account Corporation Taxation Act, all right? Remember, that was to catch, if you're a US citizen and you have money in an account outside of the US, the bank that holds your money is obligated to report to the US government, the IRS, in the US, that your account exists. And here are the large transactions you went into in the past 12 months. Okay, much more administrative inconvenience for banks around the world to look after US citizen accounts. And I'm thinking, wow, I'm so happy with that. You know why? Because I'm not a US citizen. It doesn't catch me, right? So banks love me, right? They say, oh, you're not a US citizen, are you? No, no. No worries, mate. I'm from Australia. So, oh, thank God. Oh, we don't have to spend as much time administrating your account because you're not a US citizen. But then we had our guest lecturer come in and talk about, but don't sit down so fast. We've now got a new arrangement for all the non-US citizens of the world that want to put their money into an OECD or G20 bank account, this Common Reporting Standard. But the difference is it's based on your residency. That means it's going to catch me. I'm an Australian citizen, but if I'm an Australian resident then, and I'm in Hong Kong and I've got money in the bank, then that bank's going to have to report to the Australian Tax Office. You with me? But it relies on me being honest in reporting in which country am I a resident of. So before Chinese New Year, it was all about the individual. It was all about the individual. And all of you are going to get caught too. You know why? Because China's joining this too. Mainland China's joining it too. It's not just Hong Kong. Yes. So this is going to catch you. Be careful when a bank asks you, oh, so which country are you a resident of? Better think twice. All right? Because then the bank can report directly to that country. It is obligated to report directly to that country. Wow. So are you going to tell the truth? Because it's easier to hide your residency. Sometimes your determination whether you're a resident or not depends on a court decision. It depends on case law. And that's different in every country. So it's not like you're a US citizen, you're not. It's black and white. It's very clear. If you're not, okay, then show me your passport of your country of citizenship, you see. But if you're asked, which country are you a tax resident of? Well, that can change every year. So that was sort of part one. That was taxation, Common Reporting Standard. Thanks, Elise, for that. All right, Common Reporting Standard. Okay, so that was the individual.